Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Landon Swan, co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Thanks for having me.
All right, so we're talking booze into the long holiday here. You look at a chart of STZ, Landon, and it's choppy, right? It moves on earnings typically. It's a competitive space at this point, but it seems like maybe the brands that they have within their portfolio may be doing a lot better than some of the other ones.
They are. They really are. And, they've got a very broad portfolio. And actually, their CEO just came on or just talked about on their last report about how maybe they're kind of spreading their efforts a little too thin. And I think there's pros and cons with this strategy. First of all, you are potentially spreading your resources too thin when you have as many brands as they do, but also you're able to test out a lot of different things, and then when you find the winners, you hammer them. And I think that's what he kind of alluded to. He said that they're going to really focus on the winners, and they've got a lot of them. I mean, Modelo has overtaken Bud Light as the #1 beer in the United States, and you can argue whether or not that was all Modelo or if it was Bud Light just fumbling on the 2-yard line with their marketing last year. But either way, I mean, I think that they've got a huge winner there, and they're really cranking the lever. Ahead of, in the beer category, ahead of Independence Day, they had a poll that showed that 75% of alcohol drinkers planned on buying beer. It's actually the highest June for beer ordering in over 3 years. So this is, all boding well for Constellation's brands Modelo. And what's interesting is that beer is not their biggest category. Wine and spirits are. And so last year, beer was up 9% on revenue. Wine and spirits were down 6%. I think a lot of that has to do with, again, that spreading of it too thin. But now that they're focusing in on some of these winners, that they've realized that they've got to get some of these, their wine and spirits division doing better. The beer's doing fantastic. And once they do that, I think that, because they have that operational objective, I think that they're going to figure this out and hopefully create a couple of Modelos in the wine and spirits category and let maybe some of the others not die off, but just don't put as many resources in the breadth of their portfolio. I love the direction that they're going. And, right now the stock, like you said, is a little bit choppy. I think on a weekly chart, you could argue there's a head and shoulders potentially hitting that neckline if you're into that kind of thing. Overall, though, it's not at highs. It's kind of in the middle of a range. And I do like how they've been executing. I think they've positioned themselves really well in this market.
You mentioned beer is doing extremely well. Wine and spirits is doing somewhat poorly, and their company's broken up into 3 sections: the corporate operations, which is basically what they say is it's all things not beer or wine and spirits, is everything else they lump into like the other section, and that's losing money. So two of the 3 are struggling in terms of their growth, but beer continues to bail this company out. How long can that go on, Landon? And put on your CEO hat. What do you change? They've got their brands. Do they acquire more? Do they thin out their herd? What do they do, Landon?
I think the key is focus. I mean, you can have 50 or 100 brands, but in the end, you're going to have a few that drive everything. And, it's not an atypical business concept, is to have a lot of products, see which ones work, and then focus. And the key here is, are they doing that second part? If they just continue to, just spread it real thin, it's not going to work over the long term. But I think that in that last call, he talked specifically about this, which is why, it's kind of got me excited. This chart that we're looking at here is the Modelo chart. You can see exactly when Bud Light issued, did their marketing fiasco that drove people into other beers. And now we're at that sustained increase, right? So there was a spike. They checked it out. They tried all these other beers. And now Modelo is higher than they were prior to Bud Light's fumble. So that's on the beer side. What you're talking about, though, with strategy, you just got to find the ones that work. You got to create a couple of wine Modelos, if you will, a couple of spirit Modelos, where you got the big winner, and that's the resources that you pump into. Now, we've seen that they're gaining a lot of prime real estate when it comes to purchasing purchasing space. 80% of beer is purchased off premise as opposed to bars and restaurants, and they're doing a great job of gobbling up that real estate. Really strong there, and you can see, how well they're performing against some of these others. I mean, Coors is beating them, but they're doing well. Bud Light Anheuser is getting crushed, and so that eventually probably will turn around, but they need to continue to hold that lead in beer and then find a couple of winners and just hammer them in wine and spirits.
Yeah, Landon, you mentioned some of those competitors on that last chart. I mean, you had Coors in there. TAP is a ticker symbol. That stock's just getting hammered, down 18% this year, near 52-week lows. When you look at this space and its competition, it's, people's taste changing at this point. But when you look at Constellation, do you guys still have positive data on this one that says you got to buy it here? Or, it's choppy during earnings events, and I think that's one of the keys when we talk about these names and we look at example trades.
Yeah, I think there's always great opportunity on earnings, especially with names that move a lot. I mean, you can really position yourself well. The way that you guys set up these trades with risk-defined positions is really smart. That's the way to trade earnings. I think that right now Constellation Brands is a slightly bullish lean. If the stock were selling off a little bit more like Coors, then it'd be a little bit better. Incidentally, yeah, I do like Coors here at the price it's at because they're a lot more beer focused, and everything that we've got is saying that beer is doing extremely well. That I think is probably a little bit better of a buy than STZ right now. But as far as STZ goes, it's definitely strong, and they recognize the strength of beer. They added $950 million of investment into brewing capacity to get their beer so they could brew more beer, get those Modelos out the door. And even with that increase in capital expenditures, which I believe was 23%, they're still showing a $1.5 billion free cash flow. So they're a fundamentally sound company. They're very strong. They got one rock star over here in the beer category. They've got to find the other rock stars. And I think you give them a year, so they're going to do that because it is a focus. It's something that they talked about. I think that's really important. It's not just me theorizing on what the CEO should do. He says this is what we're going to do. So I'm bullish here.
Landon, real quick, one more small question. The phenomenon that your data is showing with Budweiser versus other brands, is that still going on? It's been like a year. Is Budweiser still showing weakness like that?
It is. It is
Woo.
Still showing weakness. And I've seen a lot of their marketing efforts. I think I saw them on UFC and some other things, getting back to like the core audience, getting away from what, the mistakes that they made. But it's going to take a while. I mean, the problem is that people are fairly loyal, and this was a switch event where people decided, I'm going to try something else. They found other beers that they like, and now they're loyal to that beer. And so Bud Light's got to win them back over time, and I think they will. I think that they see the data, they figured it out, and they've got to, slowly win those people back and not make any more mistakes. But yeah, it's definitely a thing. I mean, it was a huge moment for Bud Light. It was actually the largest sentiment decrease in the history of Likefolio data. We've never seen a move like that. If I remember correctly, it was mid-70s to mid-20s, basically within a week. And that has definitely come back. But in that time, I mean, that was months long. During that time, people tried other beers, they found their other brands, and now it's a slow crawl back for Bud Light. So that they opened the window for other companies like Coors and Constellation Brands, and they've jumped right in and took advantage.
Bud drinkers hold grudges.
Not going to look good on a resume, Tom.
No, not at all. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio. I'm partial